Precious metals are under pressure, and the sell-off is sparking a real question. Does gold still deserve its safe haven reputation? That debate is front and center right now, as gold declines alongside risk assets, rather than holding steady or moving higher the way many investors expect it to during times of stress. Gold has carried the safe haven label for generations. The idea is simple. When everything else falls apart, gold holds its ground. Investors, both large portfolio managers and everyday buyers, allocate to gold specifically because it is supposed to behave differently than stocks or industrial commodities when markets get rocky. So when gold drops at the same time as those other assets, it complicates the case for owning it as a hedge. But before drawing firm conclusions, it helps to understand what is actually driving the selling. Two forces in particular tend to hit gold hard, even when uncertainty is high. The first is a rising US dollar. Because gold is priced in dollars, a stronger dollar raises the effective cost for buyers in other currencies, which softens demand and pulls prices lower. The second force is higher real interest rates. Real yields are what you earn on bonds after accounting for inflation. When those yields rise, non-yielding assets like gold and silver become less attractive by comparison. If investors believe the Federal Reserve will keep rates elevated for an extended period, that expectation alone can weigh on metal prices regardless of what else is happening in markets. The rest of the metals complex is feeling it too. Silver, which has both safe haven and industrial characteristics, often gets hit harder than gold during broad sell-offs. Platinum and palladium are more closely tied to automotive and industrial demand, so they face their own separate headwinds. When all four metals decline together like this, it usually points to a macro driver, something like dollar strength, shifting rate expectations, or forced liquidation, rather than any story specific to one metal. Here is the important context, though. Gold's safe haven status is not an on-off switch. The metal has reasserted that role repeatedly over long stretches, even after shorter periods when it moved in line with risk assets. Correlation breakdowns in the short term are not unusual. They do not automatically mean gold has lost its function inside a diversified portfolio. Time horizon matters a great deal when judging how gold is doing its job. The more decisive test will come the next time genuine financial stress hits. How gold behaves in that moment will say far more than the current sell-off does. For now, the signals worth watching are the direction of the dollar, Federal Reserve commentary, and where real yields are heading. Those three factors are doing most of the work in this metals market right now. Bullion Flash is brought to you by Absolute Bullion, a California-based dealer in gold, silver, platinum, and palladium. More at absolutebullion.com.